Alright guys, I promised to do a video about my setup and methodology and process for a long time now, and it's the most common question I get asked to explain my process and method and setup selection, and I promised to do a video for way too long, and yeah, so enough is enough. It's time to actually do it instead of promising things. So I have a few basic setups that I trade over and over and over again. Let's start with the parabolic short. And what is the parabolic short? Let's take a few examples. It's a stock that gets very extended in a short amount of time. So there's two components to it. You have a percentage move. Preferably it's 200-300% or maybe even 1,000% plus in a short amount of time, like 3 days, 5 days, 2 weeks or something. Something that goes up a lot in a short amount of time, and preferably it goes up on nothing, some speculation or hype or just a pure pump. Let's take INO for example. Recently, this thing, like, this is what you're looking for, something that's just straight up with no dips. This thing went up 300% in 1, 2, 3, 4, 5 sessions. On the 5th day, now this is important, you have to wait. You can't short on the 1st or 2nd day generally. Sometimes it works shorting stocks on the 1st or 2nd day, but I prefer to wait the ones that go up for 3, 4, even 5 days. Those are the best ones. Because you want to be in a position of strength. You don't want to start shorting it down here because you think it's a piece of shit pump and it's up too much. You don't want to short it on day 1 or day 2. Okay, and this is a trade I actually did real time on the stream. So those of you who've been following my stream, you remember this trade. I know several of you did trade it with me. The 5th day, it's a big euphoric gap up, and then it just tanks. Okay, let's look at the now I don't have the intraday 5-minute chart available right now, I think. Nope, I don't have the 5-minute chart. Let's look at the 10-minute chart, or maybe 15-minute chart. Yeah, let's see here. Okay, so 15-minute chart. Still I need the 5-minute. But pretty much what you saw was it had a little bit of push out of the gate, and then it took out opening range lows. Now this is key. Like, I talk a lot about opening range highs and opening range lows. And I trade them all the time. If I want to short, opening range lows is usually where I want to short it. And the opening range can be the 1-minute chart, like the 1-minute candle, the first 1-minute candle. It can be the 5-minute candle, first 5-minute candle, or it could be the first hourly candle. Like these charts here, I use the 1-hour chart a lot, and it can also be like, for example, on INO, the opening range lows on the 60-minute chart was 1620 on this day here. But on the 1-minute chart, it was up here in the 18s, and also in the 5-minute chart, it was also here in the 18s. I don't have the 5-minute and 1-minute charts right now on this platform. I should have prepared better for this stream. It was kind of sporadic. I didn't really prepare. But yeah, let's look at a recent example. mRNA. This one wasn't an opening range lows play. It was more of it was still a range break. Like, I also talk a lot about long, tight ranges. So mRNA was another candidate. It's been up 500%. It's a large cap stock. 500% in 6 months for a large cap stock. That's a big move. That's a very big move. A lot of hype and speculation with their vaccine, COVID-19 vaccine, etc., etc. And they had kind of decent data on this day here. The stock was already extended. They released some decent data, but it was only from 8 patients, which is kind of irrelevant. So this one I was stalking for a good risk-reward setup. Now it did have, I think I even shorted it. I don't remember if I did. I think I shorted on the opening range lows and took a loss on it. This is like last week. I really don't remember. I'm so bad at remembering trades. But I may have taken a loss on the first trade. But in late day, just went in a tight range. And late day, it started fading. And that's where you got a tight range on it. $2, risk $2 to make potentially $20, $25 on the downside. And that's exactly what happened, just straight down from there. So this was another extended stock. But it wasn't up like 3-4 days in a row. It had just been flagging for a week, and then it gapped up on this news. But it was already pretty overextended. So it's kind of similar setup to the INO setup I was talking about. But it wasn't straight up as violently as this INO. But the key in both of these, you don't randomly short them. You wait for them to actually start going lower. You don't start randomly picking tops. You wait for weakness. So that's why you wait for these opening range lows or mid-late day fades. So it's kind of the same trade, but the variation of the same trade, pretty much. And INO had a exactly similar setup a little bit later in April. Also, it went up 100% in just 5-6 sessions, and then you had this little bit of a peak day. You pretty much count the days. It's up 1, 2, 3, 4. Even on this, even if the candle here is red, the stock was still higher on this day. The candle here is red because it closed lower than it opened, but it still closed higher than the previous day, so it was still an up day. So you have what, 1, 2, 3, 4, 5, 6 on the 7th day. You get this little bit of a reversal. Well, it actually was a pretty big reversal. Where are we? I can't find it on the 5-minute chart. Oh, okay. I have to look at the 10-minute chart. And it's the same thing. Exactly the same thing. Opening range lows was the key. Now on the 10-minute chart, the opening range lows is here 15, 17 or so. But I think on the 1 and 5-minute charts, it was higher, like mid or high 15s. So you wait for that, opening range lows, because the stock has been straight up. Then it triggers. It tried to bounce, and I'm going to introduce you another concept, VWAP. This is an indicator I use a lot when shorting, only when I'm shorting stocks, pretty much. Or when I play mean aversion trades. Sometimes I do use it on the long side too, but only when I do bounce plays. I'm going to go through that later. So it tests VWAP, can't get above, holds below VWAP, midday. Similar to what mRNA did, it built a range for several hours, and then it breaks below that, and then it just, fades straight down. Then it went sideways a little bit for a few days, and then it had another leg lower. And I should also mention I'm mostly a swing trader. I don't do trades for day trades. When I do a trade, I do it to hold for several days or weeks if I'm short, and generally for weeks and months if I go long. So let's look at some mean aversion long trades. I'm gonna see one that I remember I had a really good trade on was on GBTC. This is a Bitcoin ETF back in December 2017. Now, you should already recognize this setup here. You have something that's up hundreds and hundreds of percent in a short amount of time. You know, has a leg higher, goes sideways, has a leg higher, goes sideways, another leg higher, then it goes up a bunch of days in a row. It pretty much doubles in a week, and then you had this blow off day, and I don't have the intraday chart for it right now, but it was a similar chart to what I showed on mRNA and INO. You get VWAP fails, and then it just starts fading, and you have a set risk reward. But I'm gonna talk about this bounce now. This is similar to the short setup, the mean version of parabolic short. This is the parabolic long. The same concept. You have a stock that's down 40, 50, 60%. In this case, it's down almost 70% in 1, 2, 3, 4 sessions. On the fourth day, gaps down big, has a washout, a little bit of a washout, goes a little bit lower from the open. And that's the same thing. It starts, it reclaims VWAP, it holds above VWAP, puts in opening range lows, and that's when you go long, once it starts proving itself. And it bounced, the total move higher was 110% in 2 days. Actually, you know what, I'm gonna find the intraday chart for you. Let's see here. Okay, let's see. To GBTC. I'm gonna find the intraday chart. I'm gonna find the chart for both the short and the long. This was such a perfect trade. You want to find these stocks with big ranges. That's where the big money is. Let's see here. So I'm gonna show you guys. Okay. 19. So I'm gonna show you. This is Evernote. I have a huge database of charts and stocks that I've been building for years and years. This is how you build an edge. So GBTC was actually a little bit choppy. Now I'm gonna show you guys this day here when it peaked and when it started the big decline. Okay, so it was a little bit choppy intraday. It was weak at first. It gapped down, but then it went straight up, reclaimed VWAP. I don't have VWAP on this chart, but it reclaimed VWAP. Actually took out the previous day's highs, and then midday it peaked. It went below VWAP, retested VWAP, and then it started fading. And that's when you have a set risk reward, because you know a lot of stocks, they start fading mid-late day, especially these momentum stocks. And that's where you have a set risk reward. You know, you don't have to guess where the top is gonna be. And then it faded 70% almost in 4 or 5 days. And now this day here, this is the 5-minute chart, okay? So this day here is the day it bounced. This is that day. So it's like you switch the you flip the chart, right? It's the same trade, but on the long side, it's extended to the downside, and it starts putting in. It puts in the first green candle. Like this is also something I talk about, the first green and the first red candle. Like if you have something that's going straight up or straight down, you wait for the first, like let's say in this case, it's something that gets getting really overextended on the downside. You wait for the first green 5-minute candle, okay, before you buy. Then you can use the low of that candle as a stop. So in this case, you get the first green candle, and this is a trade I traded. I did trade it, but I didn't stream at this time. This is like a year before I started streaming. So you add a little bit, then it takes out the opening range highs. That's where you add more and go straight up. Unfortunately, I sold this thing way early. I don't think even I held it overnight. And then the next day it went up another 20-30%. So these are the mean reversion trades, the parabolic short and the parabolic longs. I'm just gonna do a quick overview. I'm not gonna go into details. There are many nuances to these trades, but these are like you know, the most important concepts of these trades. And then another important setup I use are the breakouts and the earnings gappers, earnings breakouts. I'm going to show you some examples of ones I have traded recently. This TDOC, I traded this on the stream. They had good earnings report. They beat both the EPS revenue. They guided higher, and the stock gaps up and goes up on big volume. Okay, it takes out a long range, a multi-year range. I'm gonna show you guys the chart on the weekly chart. I'm gonna show you the weekly chart. So this is where it broke out on high volume. You have a stock that's been building higher lows for over a year, took out the range. This is a growth stock. They're in the right sector, right business. Things are going well. This is where the stock is up, straight up since 2016. Things are going well for them. And then a gap up on a good earnings report. And this is what started the big move. Unfortunately, it went up 160% in a few months. Unfortunately, I sold this thing, I think, in the at 105 or something. I don't remember exactly. I sold it way too early. It doubled after I sold it, pretty much. Another example would be the XCM. This is another one I traded. Very similar chart. You wait for a long range break. It needs to gap up on good earnings, beat the analyst estimates, have good growth numbers. The EPS grew by 261% year over year, and the revenue grew by 49%. This is a growth stock. The estimates for the next year were 156%, or the same year. This is 2019, and the estimates for the next year, which is 2020, was 54%. So they were going to keep growing, and it went straight up. Now they don't all go straight up, obviously. I'm just showing perfect examples. Obviously, I take a lot of losses. In fact, about 60% of my trades are losses. Even more, I think. I think even 70%. I think last year almost 70% of my trades were losses or break-evens, and yet I'm wildly profitable. And that's because you have to have small losers, big winners. Anyways, DXCM, this is the weekly chart, similar setup. You have a higher lows for 6 months, you have a range, like a year-long range, then it gaps up on good earnings, beats analyst estimates, guides higher, etc., etc. Things are going well for this company. And it more than doubles. It had a big shakeout here during the Corona crisis, where it bounced perfectly off the rising 200 day. So I'm going to show you some examples from my own portfolio of these setups. Let's look at mRNA. Like mRNA I went over. I'm still short this thing. I'm still short from this day here. Now I've been adding on the 60-minute ranges. For example, yesterday it gapped down while the market was gapping up. It showed relative weakness. This is also a concept I talked a lot about. Relative strength and relative weakness. If you're stalking a stock for a short and it starts showing relative weakness, that's a good sign, and vice versa for if you're stalking something on the long side. So an opening range lows here, I added to it yesterday and went straight down, and it's gapping down today while the markets are gapping higher. SPYs are up like almost 1% overnight. Oh, more 1.3%. So mRNA. IBIO, this is a stock I've been long for a while. This is also like a range break. This is like a small tiny piece of shit stock I'm long because it's a theme stock. Like COVID-19 is right now the theme. The COVID-19 vaccines are a very hot theme right now. So technically, what did I see? I saw a range break several months. This is a former momentum stock. Had a big move back in February on Corona. This is a Corona-related pump. And then here, had a big volume day. Or not that big, but you know, above average volume. So I thought, hey, why not? It's a good risk reward. Why can't this thing double? A lot of these things are doubling. W. This one is a range break from yesterday. I shorted it. This thing is up. It was up 840% in like a few months. So very overextended name. This is just a variation of the same setup. You wait for weakness on a very strong stock. And yesterday it lost the rising 20-day for the first time since this whole big move. And today it's gapping lower, even though the markets are gapping higher. So it's showing relative weakness. I think next stop for this thing would be maybe 130, 120 area. Livongo, this is an earnings related trade. It's a recent IPO. I bought it a couple of months ago. Had a multi-month, like 6 months sideways move. Recent IPO, they sold it off. It went straight down from the IPO. It was, kind of expensive stock, and the market wasn't sure if they could sustain the growth, etc., etc. But then it, guided higher. Stock gapped up on higher on volume. It didn't have big volume, but I did a small position because it just looked really good. IPO breakout. The IPO breakouts can be super powerful, and it's straight up since. And I'm still holding about half of my shares. Fastly, another one I bought like a couple of weeks ago. Another IPO breakout. This thing has pretty much gone sideways since the IPO, and then suddenly they had a good report. 38, no profits, but 38% revenue growth, good guidance, etc. Big volume, by far the biggest volume there. And it traded like in the first 5 minutes. You saw the big volume coming in. It traded average daily volume, which is about 1.5 million shares in like the first, I don't know, 5 or so minutes, 10 minutes. So it was fairly, pretty. It was obvious pretty early it was gonna be a high volume day. So I bought it, and yeah, I'm gonna show the P&L on everything later, and I'm gonna show you my portfolio at the end of the video on all of these stocks I'm in right now, these longs and shorts. NVAX, another one I've been talking about. I did short it this day here, another one of these overextended names, up 1400% in a few months, and then you had the first stage just getting extended. First day it showed some weakness, took out opening range lows, started testing VWAP, failed at VWAP, and that's where I shorted it. This is the 60-minute chart. I shorted it here at 56 area, if I remember correctly. Meili, another earnings play I'm long. Same concept, big long range break, year-long range break, and big volume on the earnings day. Earnings beat, guides higher, etc., etc. ARCT is just a small hype COVID-19 vaccine play. I bought it here and inside of this flag when it was obvious it was building higher lows. I think I bought it here, low 45s. This is another type of setup, like high tide flags. PDD, also another high tide flag I bought here. It's a China growth stock, very good earnings numbers. I didn't buy it on the earnings report, but I did buy it when it bounced off the rising 20-day after coming out of a long range, and had a clean breakout here, and it's straight up since. KciAjkEFA6s. Now obviously all of these trades are profitable because I sell my losers, I keep my winners. It's a concept I talk about a lot. Small winners, small losses, small losers, big winners. Okay, that's why I can be wildly profitable while being wrong 70% of the time. KciAjkEFA6s, another earnings breakout, which over a year-long base, etc., etc. It's the same concept. SC, same concept here. Had a flag. Where did I buy it? Yeah, I did buy it here on this day here. Came out, held up very well during the Corona crisis. Flagged, and it broke out of this little flag, and it's like one of the fastest growing stocks in the market right now. You want to be in the growth stocks, the ones that have bright futures. You don't want to be in something that's has negative earnings or very slow earnings revenue growth. You want the stocks growing 30, 50, 100%. FMCI, it's just a pump play. I'm not even gonna talk about it. It's just a thin piece of shit one. This is another one. It's a COVID-19 related name. It's a thin name. I bought it on the flag break here. Had good earnings. They sell some kind of respiratory devices to hospitals, which is, you know, something that's a very hot product right now with the corona. EMPH, I'm short. This is an example of an overextended trade. Straight up, we had one leg up, second leg up, third, fourth, and fifth leg up. On the third day, opening range lows. That's where I shorted it. Or I didn't short the opening range low. I shorted it here, midday. On the 60-minute chart, you can clearly see. Have a multi-hour range, and then you have this breakdown of this range. So you have a tight range here. You can, you know, risk is like $1. And I'm still short like half size, just trailing it. Pen, another example, one I did on the stream yesterday. Gonna show the intraday chart. You had the opening range lows. It failed at VWAP not once but twice. And I showed it opening range lows. And I was thinking about adding it when it failed VWAP another time midday, but I never did. VTIQ, a perfect example of a mean aversion short. Unfortunately, I took a $125,000 loss on it. I was a little bit too aggressive too early, and then I didn't add back when it showed some weakness. And yeah, it worked out well. It went down over 30-40%. And then I played the bounce. I'm still long it. I bought the bounce on this day here. On the 60-minute chart, took out a little bit of a range. But it's just a variation. It wasn't like a super clean setup. It's a variation of the bounce setup. BLDP, breakout, momentum stock. It's in the right sector, fuel cells. Fuel cells are super hot right now. And had a bull flag. Tight bull flag, and it gaps up on big volume, and that's, you know, where I bought it. I bought opening range highs, 1040s or 1050s, I think. Mark, this is a pump stock, but it's the same concept. You have a flag and you buy it. FAS had a breakout yesterday. It's a triple financial ETF. It's been pretty much flagging off the lows, building a tight range over the past week, and then it gapped up on high volume, and opening range highs was the entry. I actually took a loss on it first because I bought it here near the open, and then it faded. It actually didn't take out the lows of the day, but I had it stop a little bit higher. I got stopped out, and then I rebought it when it took out the opening range highs a little bit later, and it's straight up since the markets are gapping up a lot. NCLH, the same thing here. It's also, again, it's a variation of the same setup. You have a range breakout. I'm not going to talk about it much. It's just, and CCL, the same thing. A range break setup on a momentum stock. Like, these things are super beaten down. They have a lot of range. The key is to trade stocks with range. I see a lot of people, they trade stocks, they have no volume, there's no range, they're in the middle of a range, there's nothing going on, and they're getting super excited about their stocks. And I'm like, no, just no. Trade stocks that have volume and range. That's where the money is. All right, I'm gonna show you guys my P&L. And this is why I focus on swing trading and not day trading, because the big money is in swing trading. This is my portfolio, screenshot taken about 15 minutes ago. Since I'm at Swedish time, the market opens in 35 minutes, 9:30. It's 8:56 US Eastern time, and the market opens 9:30 Eastern time, so it's in 34 minutes. You know, some of these positions I've had for months. Livongo, I talked about this one. This is my oldest position. SC is my also a very old position. And this is how my portfolio looks like right now. I sold a bunch of stuff pre-market. I sold some BLDP. We have a big gap up, and I just want to light. I'm heavily long right now. I'm short a bunch of stuff, but I just wanted to, you know, lock into this euphoric little open here. We're having sold some NCLH, covered some mRNA, because like I talked about earlier in the video, mRNA is showing relative weakness. It's gapping down while the markets are gapping up. So locking into weakness. I'm always looking my longs into strength and my shorts into weakness, and then I trail my stops. And I also sold some FAS. And I'm probably gonna get rid of more stuff. And the reason why everything is green in my portfolio is, again, I sell my losers, okay? You get rid of your losers, you keep your winners. And I've been building this portfolio over the past 6 weeks or so. My oldest position is Livongo. Like, I was all cash at one point during the Corona crash. And then Livongo, let's see, I bought it 7th of April, so about 7 weeks or so. This were the time I've been building my portfolio. All right, I hope you got value. Oh no, never mind. I actually have more things to go through. Never mind. Quick about my scans. I scan for stocks that go up a lot. Like I have this watch list, today's momentum watch list. This watch list, 271 names. I get these stocks from these scans. So that's my nightly scans, right? So I scan for stocks that trade $60 million volume, $60 million in daily volume. Average daily range is the percentage range during a day. That has to be at least 2.4%, and it has to be among the 7% or so strongest stocks. If I do this scan right now, I get 4 items. I don't know why I only get 4 items. There should be more. I think there's something wrong right now with TC2000. There should be like 40 names. Let's do the 1 month scan. Again, $60 million volume, average daily range past 20 days, 2.4%, and among the 7% or so strongest stocks. And I only get 4. Oh, it's because I'm including pre-market data. I'm shutting off the pre-market data. I'm gonna. Okay, let's see now. Okay, now it's 47 stocks. Okay, all right. So I have these for different time frames: 1.5 year, 1 month, 1 year, 6 months, 3 months, blah blah blah, etc. Then I also scan for 5-day gainers, $60 million volume, up 25% at least past 5 days. So I'm pretty much scanning for stocks that are strong, because that among the strong stocks, that's where you get the best shorts and the best longs. Then I also scan for losers, stocks that are down a lot the past 1 or 2 years. Then I have some intraday scans. It's the same thing pretty much. Scanning for stocks that are strong. Then I also have watch list with the best and strongest growth stocks. Strongest are the best, the fastest growing and the best momentum stocks. Then I have strong, stronger, and strong. So these stocks, these ones I also go through every day, every night, and also scan them intraday. Like this is where among these stocks is where the big money is made. Right now there's a lot of software technology stocks in there, but depending on year and market cycle, you can get a lot of like commodity related stocks or cyclicals. You can get a lot of biotech related. Right now we're in a market cycle where technology and software are dominant. Those are the fastest sectors and have the best momentum. So most of these stocks in those watch lists are technology and software. All right, this is pretty much it, and then I compile a watch list every night, look through my scans, and start stocking stuff. And it's always nice if the stocks you want to go long showing relative strength and the stocks you want to go short are showing relative weakness. All right. I think this is a good starter video. Maybe I'll do a longer, more detailed video later. This is a very unprepared video, and I hope you got value from it. This, you know, if you learn these concepts, you can make millions. You can make millions per year for the rest of your life. But you really need to do your own, you know, do your own research. I've done my research. Like I've studied thousands, tens of thousands of stocks. Look at this. This is my Evernote database. Like I have breakouts from 1980, right? I've like tens of thousands of stocks here. These are just breakouts. You have to train your brain to recognize not only the stock patterns but also the news and how they move in relation to each other and the market. These are like earning scappers. Let's look at SanDisk. This is like 2005, I think. Gapped up on big volume 2005, and then it went up over a couple of 100% in like 6 months. Anyway, you gotta do this work yourself. No one can help you with this. Like, this is how you build mastery. Instead of following people and begging for stock tips, and just unfollow all these stupid day traders that are you know, pumping stocks on Twitter, or you know, having some paid chat room where they tell you what to buy, what to sell. They're not your friends. They're not helping you. You need to do the research yourself. I have a free stream where you can ask questions, where I give trading ideas. It's not entertainment. I'm not selling anything. I'm doing my own trading. I'm quiet most of the time since I'm busy trading. But when I get a few minutes over free time, I answer questions, and I provide feedback to those who want it. All right. Hope you got some value out of this video, and take care.